The US dollar has long dominated global finance, serving as the world's reserve currency, a position it has held since the end of World War II. This status means that the dollar isn't just America's money, it's the currency that underpins the global economy, trusted by governments, businesses, and individuals around the world. The dollar acts as the backbone of international trade, facilitating the movement of goods and services across continents. Whether it's oil from the Middle East, electronics from Asia, or grain from the Americas, most of these transactions are priced and settled in dollars, making it the lifeblood of global commerce. This dominance gives the US enormous economic and political power. It allows the US government to borrow money at lower interest rates, since investors worldwide see the dollar as a safe haven. It also gives Washington significant influence over global affairs, as it can impose sanctions or restrict access to the dollar-based financial system. Most international transactions from oil to electronics are conducted in dollars, shaping economies worldwide. This means that fluctuations in the dollar's value can ripple across the globe, affecting everything from the price of food in Africa to the cost of borrowing in Europe and Asia. But the world is changing. China, now the world's second-largest economy, is pushing to elevate its own currency, the yuan, onto the global stage. Beijing is encouraging its trading partners to use the yuan for trade and investment, and is steadily opening its financial markets to foreign investors. This isn't just about national pride, it's a calculated strategy to reduce China's vulnerability to US financial pressure, and to challenge a system built largely without China's input. By internationalizing the yuan, China hopes to gain more control over its economic destiny and to reshape the rules of global finance. Having a global currency brings immense benefits: cheaper borrowing, lower transaction costs, and powerful leverage in global finance. It also means a country's economic policies can have far-reaching effects, influencing markets and decisions in every corner of the world. But for other nations, heavy reliance on the dollar leaves them exposed to US policy shifts and political risks. A single decision in Washington can send shockwaves through emerging markets, disrupt trade, or even trigger financial crises, a reality that has not gone unnoticed in Beijing and beyond. The yuan's rise is about more than just exchange rates or economic rivalry. It's a central chapter in the shifting balance of power between the US and China. As the world's two largest economies compete for influence, the currency you use could soon say as much about geopolitics as it does about economics. As China builds a parallel financial system and more countries consider alternatives to the dollar, the world faces a future with a more complex and fragmented global financial landscape, one where the rules are still being written and the stakes have never been higher. China's push for a global yuan is driven by a desire to reduce its vulnerability to US financial power. Beijing has watched as the US uses the dollar to impose sanctions and exert pressure, and it wants to avoid similar risks. With most of its reserves in dollars, China fears a US debt crisis could erode its wealth. Internationalizing the yuan is both a shield and a tool for projecting influence. By promoting the yuan, China aims to become a rule maker, not just a rule taker, in the global economy. Initiatives like the Belt and Road and the Asian Infrastructure Investment Bank encourage partners to use the yuan, building a new sphere of economic influence. Each trade deal and loan in yuan chips away at the dollar's dominance and strengthens China's position. China is methodically expanding the yuan's global reach through practical steps in trade and finance. Bilateral currency swap agreements with over 30 central banks make it easier for partners to use yuan, bypassing the dollar. China leverages its status as the world's top trader to encourage partners to settle transactions in yuan, especially for commodities. The Cross-Border Interbank Payment System, CIPS, offers a yuan-based alternative to SWIFT, making international payments faster and more direct. Offshore yuan markets in Hong Kong, Singapore, and London allow foreign investors to access the currency outside China's capital controls. By strengthening these financial channels, China is building the infrastructure and trust needed for the yuan to become a global currency. The goal: make the yuan a familiar, reliable option for international business. China is also leading in digital currency innovation with the ECNY, a central bank digital currency. Unlike cryptocurrencies, the ECNY is state-backed and already in use across Chinese cities. A digital yuan could revolutionize cross-border payments, making them instant and bypassing the dollar. China is testing the ECNY internationally, collaborating with other central banks to set new standards for digital payments. This first-mover advantage could give China a powerful edge, but concerns about surveillance and trust remain. The ECNY is both a tool for efficiency and a source of geopolitical tension. The yuan's global role is growing, but progress is gradual. In 2023, the yuan became the second most used currency in global trade finance, surpassing the euro. Its share of global foreign exchange reserves has climbed to about 2.5%, up from almost nothing a decade ago. Geopolitical events like sanctions on Russia have pushed more countries to diversify into yuan. Still, the yuan's usage lags far behind China's economic size, reflecting the dollar's deep-rooted dominance. Trust, liquidity, and transparency keep the dollar on top, while the yuan is seen as less liquid and riskier. China is playing the long game, building infrastructure and relationships to support the yuan's rise. The goal isn't to dethrone the dollar overnight, but to create a robust alternative as China's power grows. Major obstacles stand in the way of the yuan's global ambitions. While China has made significant strides in promoting its currency on the world stage, the journey toward true dominance is fraught with challenges that go far beyond simple economics. The yuan isn't fully convertible. China's strict capital controls deter international investors who want freedom to move money. These controls are designed to protect the domestic economy, but they also create a sense of uncertainty and limit the yuan's flexibility in global markets. This contradiction, seeking global influence while maintaining tight control, limits the yuan's appeal. Investors are left questioning whether they can trust the system, especially when sudden policy changes can impact their holdings overnight. U.S. markets offer unmatched liquidity, transparency, and legal protection, making them the world's safe haven. The dollar's dominance is reinforced by decades of trust, open markets, and a robust legal framework that gives investors confidence. China's financial system, by contrast, is seen as opaque and subject to sudden policy shifts. Regulatory decisions can be unpredictable, and the lack of clear communication from authorities adds to the sense of risk. Political risk and lack of legal independence make global investors wary of holding large amounts of yuan. The close relationship between the government and financial institutions means that market forces often take a back seat to political priorities. Overcoming these hurdles would require deep reforms, challenging the Communist Party's control. Such changes would not only be economically significant but also politically sensitive, as they would require loosening the party's grip on the financial system. The dollar's dominance is entrenched in global systems and habits, making change slow and difficult. International trade, investment, and even central bank reserves are all deeply tied to the dollar, creating a powerful network effect that is hard to break. Until China offers a comparable safe haven and trusted ecosystem, the yuan will remain a secondary player. Trust, transparency, and stability are essential ingredients for any currency seeking global status, and these take years, if not decades, to build. The path to true global currency status is long and uncertain. For the yuan, the journey is just beginning, and the world will be watching to see if China is willing to make the bold changes necessary to overcome these formidable hurdles. China's currency ambitions are constrained by domestic economic challenges. Soaring debt, especially in property and local governments, limits Beijing's policy options. Opening up the capital account risks capital flight and financial instability. The economy's reliance on exports and weak consumption complicate efforts to strengthen the yuan. A stronger yuan could boost consumption, but hurt exports and jobs. The property crisis has eroded household wealth and confidence, forcing the government to focus on stability. Major reforms needed for yuan internationalization are risky in this fragile environment. Before the yuan can truly compete globally, China must resolve its domestic imbalances, a process that will take years. Instead of global dominance, China is focusing on regionalizing the yuan. The strategy embed the yuan in Asia, Africa, and Latin America, building a yuan-centric economic bloc. The Belt and Road Initiative and state-backed loans in yuan create captive demand among partner countries. Many developing nations welcome alternatives to the Western-led system, even if it means accepting China's rules. For these countries, using the yuan is both an economic and geopolitical choice. China is building a coalition of partners, expanding the yuan's reach without full domestic reforms. This dual-track system, tight controls at home, flexibility abroad, lets China grow the yuan's influence regionally. While the yuan may never rival the dollar globally, it could dominate a significant part of the world economy. China's push to elevate the yuan is reshaping the global monetary landscape, signaling a profound shift in how money and power flow across borders. As the world's second-largest economy, China is no longer content to play a supporting role in a system dominated by the US dollar. Instead, it is actively seeking to carve out a larger space for its own currency on the world stage. The motivations are clear: reduce US leverage, project power, and rewrite the rules of global finance. By promoting the yuan, China hopes to insulate itself from external shocks and political pressures, while also offering an alternative to countries wary of dollar dependence. Through trade deals, currency swaps, and digital innovation, China is laying the groundwork for a multipolar system. Initiatives like the Belt and Road and the development of the digital yuan are designed to expand the currency's reach and make it easier for partners to do business in yuan. A stronger yuan would lower China's borrowing costs, attract more foreign investment, and increase its global influence. It would also give Chinese companies and banks more flexibility in international markets, making China less vulnerable to currency fluctuations and sanctions. But internal contradictions between control and openness limit how far the yuan can go. China's government is reluctant to fully open its financial system, fearing instability and loss of control, which makes global investors cautious about embracing the yuan as a true reserve currency. For the world, a more prominent yuan means more choice, but also more complexity and potential instability. Countries and companies may benefit from alternatives to the dollar, but they must also navigate new risks and uncertainties in a more fragmented monetary system. Competing currency blocks could emerge, with the dollar and yuan at the center of rival networks. This could reshape alliances, trade flows, and even the balance of geopolitical power, as nations align themselves with different financial systems. The dollar's supremacy won't end soon, but its unchallenged reign may be over. The US still enjoys deep liquid markets and global trust, but the rise of the yuan signals a new era of competition. The future is likely to be multipolar, with the yuan standing alongside the dollar and euro as a key global currency. In this new landscape, power and influence will be more widely distributed, and the rules of the game are still being written.